Hey traders and investors, it's Serge Berger here. Today we're going to have a look at the Russell 2000. I have continued to highlight the Russell 2000 over the past few months because I continue to think it's a very important leading indicator, so to speak, for being able to measure potentially where we are in the process of developing a cyclical top in the broader U.S. equity indices. So if you just look at this chart here, this is the Russell 2000 itself. This is not the ETF like the IWM. This is the Russell 2000 itself. And you can see basically the major breakout that took place in January of last year, so about a year and a half ago, really was what caused the sharp 2013 rally that really stalled right in March of this year. So the base case that I continue to operate with is that we did develop a double top in the Russell 2000, basically with the retest of the March highs just a few weeks ago in early July. If you remember, that was the sort of post the post jobless June jobless claims number where the market rallied higher. Also, the broader market did, the S&P 500, and then really turned around. So if you focus on these 2 points here, which is really the double top that I'm talking about, you'll see that quite clearly. In the meantime, the index continues to hold this this 2012 uptrend, which I'll draw in for you quickly just so you can see. Actually, I don't have a logarithmic chart, so it's not as clean to see. But basically, in the bigger picture, the index continues to hold it, or continued to hold its 200-day moving average, which is this red line. So it's not as important a line to look at, because obviously you can see it lost a lot of respect here in May when the index actually just dipped below and then moved higher. But it's an interesting area to watch to see how cleanly the index can move below there. From my point of view, this development here with the double top has a much higher chance now of pushing the index lower. At the very least, as a next stop here, we probably should have the May lows, which is about another, say, 3 to 4% lower, where I'd expect we bounce a little bit before then ultimately going lower. But basically, the big point here that I think is important to take away is that markets don't top in a sort of V. At one point, markets top. Markets topping is a process. So in this case, we had a long, if I could get this right, we had a long move higher, which has then led to a sideways move, which essentially what has been for most of this year has been that sideways move. And I think now we are getting increasingly close to finally breaking, or ultimately breaking below the March low. So keep a close eye on the Russell 2000 as a leading indicator. I continue to highlight this because it really is that important to get better perspective of how to trade equities here in the near to medium term. Hope this makes sense, guys. As always, if you've got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader, and I'll see you in the next video.